GameStop, a one-stop destination for all gaming needs, become a buzzword in investment world in 2021. Every other person, media channel, news site was talking about one thing: GameStop. This frenzy was not fueled by influential people of the investment world, but everyday humans writing posts on Reddit. And this mission of these Redditors was successful. For some guys, it's Ahmed, and today we're going to understand how retail investors change the narrative of being down money in Wall Street by going against the institutional investors or smart money. Before we started, understanding the term short squeeze is very important. So let's first understand what is short selling before short squeeze. Imagine the price of a stock of a company is $10 and you think the price will go down in future. So what you do is you borrow a stock of that company from your friend and sell it in the market. After some time, the price comes down to $5. Now you buy that stock from the market and give back to your friend, meanwhile pocketing a profit of $5. This process is called short selling or shorting the stock. And what actually short squeeze is when your guess of stock going down turns out to be wrong. Imagine the stock goes up to $15. Your friend is calling you to give back the stocks and you think you messed up, and you actually messed up. Now you have to buy that stock at $15 to give it back to your friend, meanwhile taking a loss of $5. This is a short squeeze, and this is how retail investors went against hedge funds. So now let's dive into the complete story. GameStop was a king in the gaming industry. Not going to talk about this company too much, but this company failed to compete in the era of online gaming because it's just a chain of traditional retail stores, and its profits started to go down every other year because the consumer interest shifted towards online downloads and mobile gaming. And in 2019, GameStop released its income statement at a huge loss of $673 million. The sentiment was that the GameStop will go bankrupt, and this was enough for the hedge funds to short its stock. In the mid of 2019, the stock was trading at $4, and hedge funds jumped on this opportunity. So hedge funds started to take the short positions, and then came the pandemic in 2020. And it increased the probability of bankruptcy because no one is going to buy the CDs in the stores. For hedge funds, pandemic was all they needed to create the profits out of their positions. So they and other sophisticated investors got aggressive with their strategy. What happened in pandemic turns out to be something very unexpected for hedge funds. In mid-2020, a guy named Gill started to live stream on YouTube channel named Roaring Kitty about how GM stock is overly shorted and it's undervalued. So people should buy it, aiming to increase the stock price. To build more momentum on his campaign, he started to post on Reddit under subreddit group named Wall Street Bets. His narrative was kind of wide, I think, because a lot of short positions made people to think negative about GameStop, and more people were selling the stock instead of buying, and this brought down the price of the stock to the lower levels, enough lower than it actually was. And people started to notice the key scale. Yeah, it was the right time for it because more people were at home. There was more online activity. There was less people going out, spending more money on dining out or going to the tours, and more people were at home. And what's more important is that the stimulus checks by governments. Yes, it was the additional money for the people, and they had to put it somewhere else. And these all factors collectively created a massive wave of retail investors along with Gill. This wave of retail investors was also fueled by a feeling of revenge from hedge funds, just to make these money managers with billions of dollars feel the power of retail investors by going against them and making a short squeeze. In January 2021, the short positions on outstanding shares of GameStop was above 100% because these money managers were so sure of GameStop going bankrupt that they borrowed shares just to lend again to other people taking short positions. This made the ratio go closer to 138% at a point in time. On one side, hedge funds were shorting the GameStop stock heavily, but on the other side, on Reddit, people were buying stock and its option contracts just to make a big short squeeze. And there is Elon Musk, who tweeted GameStop on January 26. And due to this, people who were not aware about this growing community started to take interest. And the real thing happened on January 28. The big short squeeze. Trading volume on this day surpassed 2006. Millions of new people joined Wall Street Bets Group, and the maximum stock price of GameStop reached $483. At that point, hedge funds realized their misunderstanding about retail community. A lot of hedge funds lost billions of dollars, specifically Melvin Capital, which lost 53% of their approximately $12 billion in assets due to heavy short positions of GameStop. They had to give back the shares to the lenders by buying them at approximately $400, which they sold before at $10. It's huge. When the stock reached $43 during the trading session on 28 January, the brokers, which was used by the normal people to buy the GM stock or its options, halted the buying of the stock. Yes, it means only people can sell now. But why? It will surely help the hedge funds to buy shares without fear of going up more to cover their short positions. The stock lost its 40% of value within an hour of reaching maximum price. This act of brokers was heavily criticized as it is seen as an act due to the influence of hedge funds on these broker firms. But later, brokers made clarifications by putting the blame on the clearinghouses that they increased cost. So after some days, the restrictions were cleared and the stock was at almost $53. This was all. Yes, a lot of people made life-changing money doing this fancy and proved Wall Street wrong. So on February 18, a hearing was held in the US House named GameStop, who wins and loses when short sellers, social media, and retail investors collide. And it turned out to be bullish for the GME stock. Stock again soared because people were holding along Keith Gill. So this is the complete story, and what's interesting in this whole thing is memes. Memes played a very important role in all of this. This shows that social media sentiment has a lot to do with the markets in general. According to a journal from Sciences, social media sentiment can create a trading strategy with meaningful economic gains of 11 to 15% on annual basis. So, opinion of an online community can reinforce investment decisions of substantial amounts of participants in the stock market. And also now on average, 25% of the trading activity in the stock market is contributed by retail investors, which means the markets are becoming democratized day by day. Hedge funds became extremely cautious after this short squeeze. They always checked internet and trading activities of the retail investors now, and also they reduced their short positions. Melvin Capital shut down its stores in 2022 after not recovering from the losses. On the other hand, Keith Gill stopped posting after last post on 16th April 2021. But on May 12, 2024, he appeared again on the internet, and GameStop stock started to take major ups and downs due to retail investors following the Keith Gill's position in GameStop stock. Maybe something interesting is coming again.